All right, so let's jump right in. We're taking a deep dive today into Aon's Q4 2024 earnings call.
Fresh off the press just a few hours ago.
We're going to break it all down, give you the insights that matter.
It's really all about what Aon reported.
And what it means for you.
Aon had a pretty strong year.
Yeah, and this quarter was no different, right? They actually closed out the first year of their 3x3 plan, and they exceeded expectations.
They did.
6% organic revenue growth.
For both the quarter.
And the full year.
That's right.
That's a really clear signal.
Definitely.
That they're not just holding on to their clients, but that they're attracting new ones.
Yes, and growing those existing relationships.
Exactly. And what's so interesting about Aon is it doesn't feel like they're just kind of riding the wave of a good market.
Nope.
It seems like they're really being proactive, positioning themselves to address these big challenges that businesses are facing.
That's right. They're really positioning themselves as the solution to those challenges.
Exactly. And, when they keep talking about those mega trends, trade, technology, weather, workforce.
It's like a perfect storm of complexity that companies are dealing with.
We're talking
These are massive issues.
California wildfires impacting, businesses around the world.
Cyber attacks.
That are becoming more sophisticated.
Every single day.
You've got global supply chains that are being disrupted constantly.
Yeah, these aren't just like risks anymore.
Right.
These are defining challenges.
Of our time.
Yes, and Aon is aiming to be that guide through all of the turbulence.
And it seems like they're doing that by combining that, traditional insurance with some pretty powerful data analytics and consulting services.
Exactly.
Is that what we're seeing here?
You've hit the nail on the head.
All right.
Aon Business Services, or ABS as they call it.
ABS.
That's their not-so-secret weapon.
It's more than just like back office operations, though, right?
Oh, yeah, way more.
What are they doing with this?
Oh, they're leveraging data to help clients really quantify what their risks are.
Okay.
Compare different options for mitigating those risks, and ultimately just make smarter decisions.
So it's like if you can show a company, hey, you can avoid this disaster.
Right.
Or you can mitigate this disaster, and it's going to save you millions of dollars.
Exactly.
You become invaluable.
It's not just about selling policies anymore. It's about those insights and solutions that directly impact the bottom line.
Okay, so we're seeing that it's paying off for them in terms of revenue growth, but how about their own efficiency?
It looks like their own operating efficiency is improving as well.
Okay, so they're doing well in their core business, but let's talk about the NFP acquisition.
Yeah.
Which closed, I think, about 8 months ago?
About 8 months ago.
They were really trying to target the middle market with that move.
Yes.
So how's that playing out?
Well, the early indicators are actually really positive.
Okay.
Producer retention has stayed strong, and they're exceeding their initial financial targets. But perhaps even more importantly, clients are really liking this blend of Aon's global reach with NFP's personalized approach.
So is it kind of like getting the best of both worlds?
It is.
You get the resources of this massive company.
Yeah.
But then you still have that local feel.
Exactly.
That relationship-driven approach.
Exactly. You got it.
I like how they're branding it.
Yeah.
Independent and Aon connected.
Very catchy.
It is really catchy.
And it really captures what they're doing.
And it seems like they're
maintaining that entrepreneurial spirit of NFP.
Yeah.
But they're plugging it into this global network and all this deep expertise.
Of Aon.
Yes. And, of course, the powerful ABS tools.
Oh, yeah. We can't forget about that.
We can't forget about that.
That's a smart move.
It is a smart move.
Okay, so it sounds like they're really onto something there.
Yeah.
But let's switch gears and talk about reinsurance.
Okay.
That market has been facing some serious headwinds.
It has.
Hasn't it?
Rates are down, competition is fierce.
Yeah.
But even with all of that pressure, Aon's reinsurance solutions still delivered a respectable 6% organic growth in Q4.
So how are they doing it?
Well, there are a couple of factors at play here.
Okay.
First, their strength in insurance-linked securities.
Okay.
Specifically, catastrophe bonds is attracting a lot of investor interest.
Oh, that's interesting.
Investors are always looking for ways to diversify their portfolios.
Right.
And catastrophe bonds offer a pretty attractive non-correlated return profile.
So it's almost like they're tapping into this whole new pool of capital.
Exactly.
That goes beyond the traditional reinsurance market.
Exactly.
That's a smart move.
It is a very smart move.
So that helps them offset some of that pricing pressure that they're seeing.
Right.
But what else are they doing?
They also just have a very strong team with deep expertise in both the traditional and alternative risk transfer mechanisms.
So even in a challenging market,
Yeah.
they're finding ways to innovate and create new solutions.
Yes, exactly.
Very impressive. But let's look ahead.
Yeah.
What's Aon's outlook for 2025 and beyond?
Well, they're projecting continued momentum.
Okay.
Aiming for mid-single-digit or greater organic revenue growth.
Okay.
And ongoing margin expansion, strong adjusted EPS growth.
So they're feeling good.
And double-digit free cash flow growth.
Okay, so what are the key initiatives that are going to drive this growth?
Well, they're going to continue investing in those strategic areas, including hiring in specialized fields like energy and construction.
Okay.
Those are sectors that are experiencing significant growth right now.
Right, so they're not just waiting around for something to happen.
You're being proactive.
They're going out and finding it.
Exactly.
So it seems like they're taking this long-term view.
Yes.
Really building a sustainable growth engine that's fueled by talent and technology.
They're not just reacting to market conditions, they're shaping the future.
And that puts them in a pretty strong position.
A very strong position.
I agree, but before we get too carried away with the positive, let's shift gears to our This Is Not Financial Advice segment.
All right, this is where we unleash our imaginations.
This is where we get a little crazy.
But of course, you want to remind everyone that we are not qualified financial advisors.
So with everything that we've talked about, what is your outrageous but plausible trade idea based on Aon's performance and their outlook?
Okay, so here's where it gets really interesting.
I like it when you say that.
Aon is clearly betting big on technology and data as key drivers of future growth. But what if they're so successful that they actually become the Bloomberg of risk?
Whoa, the Bloomberg of risk.
You hear me right?
That's a big statement.
It is.
What do you mean by that?
Think about it. Bloomberg is the undisputed go-to platform
for financial data
information.
Okay.
What if Aon achieves that same level of dominance in the world of risk? If they can successfully position themselves as the indispensable platform for understanding and managing risk, their valuation could skyrocket.
So are you saying we buy Aon stock?
Not so fast. Remember, this is not financial advice territory.
Right.
My thought here is this. Buy a long-dated call option on Aon.
Okay.
This is a bet that their 3x3 plan is going to deliver those outsized returns in the years to come.
Yeah.
And a call option gives you leverage to that potential upside while limiting your downside risk.
Okay, so before anyone runs out to buy call options, let's be super clear.
Crystal clear.
This is not financial advice.
This is not financial advice. Do your own research, understand the risks. And consult with a qualified professional.
Yes, talk to your financial advisor.
Before making any investment decisions.
We are just brainstorming possibilities here.
Just spitballing.
We are not responsible for anyone's trading decisions.
I agree.
Okay, good. I just wanted to make sure we were on the same page.
But it is intriguing to consider the potential.
It is.
Right, if Aon really becomes the Bloomberg of risk, the payoff could be enormous.
It's definitely food for thought.
It is.
But for now, let's wrap up part 1 of our deep dive into Aon.
Sounds good to me. Welcome back to our deep dive into Aon's Q4 2024 earnings call.
All right, so we laid the foundation in part 1.
Now it's time to excavate some of the finer details.
Let's do it. Let's get digging.
All right, so let's start with margins.
Okay.
Aon delivered a 33.3% adjusted operating margin in Q4.
Wow.
That's a solid 140 basis point expansion from their baseline with NFP.
Okay.
And for the full year, they achieved 31.5%.
Okay.
With 90 basis points of expansion.
That's pretty good.
So you know what this tells me?
What's that tell you?
They're getting really good at leveraging their scale and driving those operational improvements.
So they're basically keeping more of every dollar they earn.
You got it. And a big chunk of that is because of Aon Business Services, ABS, right? By streamlining operations, automating processes, and building these really sophisticated client tools, they're freeing up resources to focus on growth and innovation.
So it's like they're creating this positive feedback loop.
Yeah.
Better technology makes clients happy.
Right.
Happier clients lead to higher margins, which then allows them to invest even more in technology.
You got it. And remember, it's not just about cutting costs.
Right.
It's about creating value.
Of course.
Those ABS tools, they're generating revenue by helping clients make those better risk management decisions.
Okay, so margins are up, revenue's up. But what about earnings per share? What's the bottom line here?
So for the full year, adjusted EPS grew by a healthy 10%, reaching 15.60.
Right.
And in Q4 alone, it jumped by 14% to $4.42.
All right, so solid growth, but it sounds like there were some challenges they had to overcome.
Yeah, interest expenses have increased.
Okay.
Which is mostly due to the debt they took on to finance the NFP acquisition. And then you've got foreign exchange rates.
Yeah, those are always fun.
They always fluctuate, and that had a slight negative impact as well.
Yeah, global companies are always grappling with that.
Yeah, it's a constant battle.
But it seems like overall they're managing those headwinds pretty effectively.
They are, and what's really encouraging is that their free cash flow is still really strong.
That's good.
They generated $2.8 billion in 2024.
Wow.
Which really just shows how healthy their business is.
That's a lot of cash.
Yeah.
What are they planning on doing with it?
They're taking a balanced approach.
Okay.
So they're paying down some of that debt.
Okay.
They're investing in growth initiatives like those strategic hires we talked about.
Right.
And they're returning capital to shareholders through dividends and share buybacks.
So they're keeping everyone happy.
It seems like investors, employees, lenders.
That's a winning formula?
It's a good formula, and it all goes back to that core philosophy.
Yeah.
Deliver value for your clients, empower your employees, and those financial results.
They'll follow.
They will follow.
Okay, so we've talked about margins, earnings, cash flow.
Yeah.
What other insights can we unearth from this earnings call?
Let's dig into how their individual business segments performed.
Okay, let's do it.
Starting with commercial risk, which saw a very healthy 6% growth in both Q4 and the full year.
That's impressive given how competitive that landscape is.
Yeah. It is. They highlighted some really strong growth in North America and continuing contributions from international markets.
So is there anything else that stands out to you there?
A couple of things.
Oh.
First, their new risk analyzer tools are getting some real traction.
Okay, like what?
Especially the property risk analyzer.
Interesting.
These tools let clients quantify their exposures, simulate the impact of different insurance options, and ultimately make more informed decisions.
So it seems like they're bringing that data-driven decision-making to an industry that's traditionally relied heavily on intuition and experience.
Exactly. And you know what? That data-driven approach is really resonating with clients, leading to higher win rates and stronger, longer-lasting relationships.
And that's a big differentiator for Aon.
In a very crowded marketplace.
Well, of course, if you can prove your value to clients, they're more likely to stick around and grow their business with you.
Exactly. The second thing that I noticed is their focus on those specialty areas like construction and energy.
Oh, yeah.
They've been strategically hiring in those high growth sectors, and it's already paying off.
So they're not just riding the wave.
Nope.
They're going out and finding those big opportunities.
They're anticipating where the growth will be, and they're positioning themselves accordingly.
Okay, so commercial risk is performing well. How about reinsurance? We talked about that 6% growth earlier.
Right.
But any more insights into how they're doing it in such a challenging market?
Well, they're definitely leveraging that expertise in insurance-linked securities like we discussed.
Right.
But they're also seeing some positive results from their strategy and technology group, which helps insurers develop innovative risk transfer solutions.
Got it.
And of course, their strong, long-standing relationships with clients.
Those are so important.
In a market where loyalty is always being tested.
For sure. So a combination of innovation, strong relationships, and a deep understanding of the reinsurance landscape.
That's right.
No wonder they're outperforming.
And they're not just focusing on the big players.
Okay.
They're also using that NFP acquisition to expand their reach into the middle market, where there's a lot of potential for growth.
So it's like they're playing this strategic game, deploying their assets to capture opportunities across that whole risk spectrum.
I like that analogy.
So we've covered commercial risk and reinsurance. What about their human capital solutions? Health, wealth, and retirement.
So those segments are also delivering strong results.
Okay, good to hear.
Health solutions grew by 5% in Q4, wealth solutions by 8%, and retirement solutions by 6% for the full year.
Solid numbers across the board. What's driving that growth?
On the health side, they're seeing a lot of demand for their core health and benefits consulting services, as well as their pharmacy benefit management solutions. And the NFP acquisition is helping out too.
Okay, how so?
Especially in executive benefits.
So they're really tapping into that need for companies to attract and retain top talent. by offering those competitive benefits packages.
Correct. And it's not just about traditional health insurance anymore.
Right.
They're also helping clients navigate this increasingly complex world of healthcare technology, data analytics, and wellness programs.
So they're like this comprehensive resource for all things employee benefits.
You got it.
Makes sense in today's competitive job market.
It does. And on the wealth side,
Yeah.
they're benefiting from strong demand for pension risk transfer consulting.
Okay.
As well as regulatory work related to policy changes in the UK and Europe.
Yep.
And again, that NFP acquisition is strengthening their wealth management capabilities.
Right, especially in that middle market.
Exactly.
So they're helping companies manage their pension obligations while also providing that wealth management advice to individuals and families.
That's right.
Smart move.
It is. And their retirement solutions business is also doing really well.
Good.
Thanks to strong demand for their investment consulting and actuarial services. They're helping companies design and manage retirement plans that meet their employees' needs.
Right.
While also making sure they're complying with regulations.
So they've got all their bases covered when it comes to human capital.
It seems like it.
No wonder they're so confident about the future.
They're building a really strong and diversified business that's well-positioned to succeed in this increasingly complex and uncertain world.
Right, and that's a pretty compelling story for investors.
It is a compelling story.
All right, well, I think we've mined just about every nugget of insight we can from this earnings call.
I think so, too.
So what do you say we wrap up part 2 of our Aon deep dive?
Okay.
And we'll gear up for the final segment.
Sounds good to me.
All right, welcome back to the final part of our deep dive into Aon's Q4 2024 earnings.
We've explored their financials.
We've looked at their strategies.
Now it's time to bring it all together.
Put it all together.
And really give you, the listener, the key takeaways.
I think what's so remarkable about Aon is that they're not just surviving in this increasingly complex world.
Right.
They are thriving.
They're turning challenges into opportunities. Using technology to really amplify their expertise.
Right.
And they're building a business that's both resilient and adaptable.
It's like they're not just managing risk. They're mastering it.
They're embracing the idea that risk is just a part of business.
Yeah.
It's a part of life. It's not something to be feared,
right,
but understood and managed strategically.
So they're turning risk into a competitive advantage.
Exactly. And they're doing it by staying laser focused on their clients.
Right.
Every decision that they make, from technology investments to strategic acquisitions, it's all geared towards those better solutions and outcomes for their clients.
And that client-centric approach seems to be paying off.
It is. They're attracting new business, strengthening existing relationships, and they're building a reputation as that trusted advisor.
And speaking of financial results, they seem to be doing really well across the board.
Okay, well.
Revenue is up, margins are expanding, free cash flow is strong.
It's a pretty impressive picture.
It is, but of course no company is without its challenges.
Right, they're still navigating that integration of NFP.
Right.
Interest rates are a factor.
Of course.
And there's always the possibility of those unforeseen events.
Yeah, those always pop up. But overall, it seems like they're in a pretty good position.
A very strong position.
Both financially and strategically.
I agree. They have a clear vision for the future, a talented team, and the resources to execute their plans.
That makes them a company worth watching.
Definitely a company to keep an eye on.
As we wrap up our Aon deep dive, what's the one key takeaway you want our listeners to remember? What's the so what of all this?
I think what I find most compelling about Aon is that they're not just adapting to change.
Right.
They're driving it. They're at the forefront of this paradigm shift in how we think about and manage risk.
Okay.
And I really believe they're poised to play a leading role in shaping the future of this entire industry.
It's not just about buying insurance anymore.
It's not. It's about understanding and managing risk holistically. Using data technology and human expertise to make better decisions.
And Aon is leading the way.
They are.
They're not just a broker. They're a strategic partner.
Exactly.
Helping their clients navigate this complex world and achieve their goals.
Well,
that's a great point to end on. Thanks for joining us on this deep dive into Aon.
It's been a pleasure. Always fascinating to explore a company that's really pushing those boundaries.
And challenging the status quo.
Challenging the status quo.
Absolutely. And for our listeners, remember, always do your own research. And talk to your financial advisor.
Please do.
Before making any investment decisions.
Absolutely.
Until next time.
See you then.